James died on 22nd Jan 2015. He had made the following gifts during his lifetime. So on 9th of October 2007, he made a cash gift of 35,000 to a trust. No lifetime inheritance tax was payable in respect of this gift. On 14th of May 2013, a cash gift of 420,000 to his daughter. On 2nd of
Okay, so
August,
so
yeah,
first of all, the 9th October 2007,
yeah, that's
how many years has it been?
it's been 8 years.
It's been 8 years. So what are we saying?
It's fine. There's nothing to pay.
Correct. It's fallen out of his estate.
Yeah.
Completely ignore it. And then the 14 May 2013, cash gift 420,000 to his daughter. It's in the last 2 years.
Yeah.
So we'll have to have a look at that. Continue, please.
Okay. On the 2nd of August 2013, a gift of a property valued at 260,000 to a trust. No lifetime inheritance tax was payable in respect of this gift because it was covered by the nil rate band. By the time of James's death on 22nd of January 15, the property had increased in value to 310,000.
Okay. You know, in terms of the 9 October 2007, we said it's been 8 years since the death. So it's out of the death estate.
Yeah.
But the cash gift to the daughter is still within 7 years.
Yeah.
So we'll have to have a look at the nil rate band available. And I'm going to leave that for you because I think last time we had a few issues. So I just want to see how you get on this time.
Yeah.
But keep in mind that
He's
2007, 2013 is exactly, some of it has been used. It's 35,000, so there'll still be some available, but we just need to keep that in mind. 2nd August 2013, we said property valued at 260,000. No lifetime inheritance tax was payable because it was covered. Okay. Property value had increased to 310,000. Okay, let's continue.
On 22nd Jan 2015, James's estate was valued at 870,000. Under the terms of his will, he left his entire estate to his children.
What are your thoughts?
It's chargeable. All of it.
Children. Yeah. However, are we saying the residence nil rate band will be available, right?
Yes, because it's a direct descendant.
However, I don't think he's got any property.
He's
gifting the property to the trust.
Yeah. There's no residential house.
Exactly. So these things, some of these things I just mentioned so that you keep an eye out for them, but it's not always relevant. But these are the things you think about. Good.
Yeah. The nil rate band of James's wife was fully utilized when she died 10 years ago. The nil rate band for tax year.
Sorry, what does that mean? The nil rate band of James's wife was fully utilized.
So there's, I can't use hers, so it will only be looking at his for this question.
Correct. Excellent. Good.
Okay. The nil rate band for tax year 7-8 is 300,000, and for 13-14 is 325,000.
Exactly. So we'll need to see what is available and where.
Yeah.
Okay. That's fine. So we have a few questions here. Calculate the IHT which will be payable as a result of James's death, and state who will be responsible for paying the tax. So you'll get 1 mark for stating who is responsible. And we need to work out the IHT payable as a result of James's death. Part B, explain why it may have been beneficial for IHT purposes if James had left a portion of his estate to his grandchildren rather than to his children. So we'll discuss that together when we come back from these 6 marks. And advantageous for IHT purposes for a person to make lifetime gifts, even when such gifts are made within 7 years of death. Any thoughts on that?
Because you get taper relief.
Taper relief, exactly. So we'll discuss that in more detail. If you do the computation or the calculation for 6 marks to begin with, and I'll give you about 7 to 10 minutes. So take your time.
Okay.
If you do the computation, and then we'll discuss B and C together.
Okay. Yep.
Okay. So talk me through what we have here, please.
So the first cash gift is exempt, so I don't need to include it. The second one, the 420,000, I've got it here. Tax year 13-14. And then I've got the CLT of 260,000 into a trust.
Okay.
And then I've deducted the current year prior year annual exemption amount.
Good. Yeah.
So that's the final two figures here. And then for the CLT, I've deducted the nil rate band completely.
Do you remember we said no, yeah. Do you remember we said that it's in cumulative order, so you'd have to go against the pet in priority.
I thought it said here. It says here no lifetime inheritance tax was payable because it's covered by the nil rate band. I was a bit confused.
Oh yeah. So then what are we saying? We're saying no lifetime inheritance tax was payable in respect. Question 1 second.
But yeah, I know what you're talking about. I do remember something when it came to calculating the death estate, taking off the nil rate band in order.
Exactly, and the question here is saying calculate the inheritance tax payable on death. So I think you would ignore that at that point, and you just go straight to the
straight to this section.
Yeah, straight to this. Yeah, exactly. That is quite confusing though. I don't understand. So no lifetime inheritance was payable in respect of this gift. I think, but when you're looking at the death tax, you're looking at cumulative. So 414.
414.
And then we said the question says is so what have we got there? So we've got death estate 870. That's as per the question.
Yeah. And then I've got the pet to the daughter, less the available nil rate band.
So to begin with, we have the nil rate band of 325,000. Okay. But the cash gift in 2007, let's just take away £6,000, 2 times annual exemption, would reduce your nil rate band available for the cash gift.
Yeah. Even if it was 7 years.
Yes,
before.
Because for the cash gift, you have to look at it at that date, and you have to see what availability is at that date, not at date of death, but at that date of cash gift.
Oh yeah.
That's what it is. You have to look 7 years back from that other date, not the date of death. 12, 13, 14. So even though you're working out the tax due on death.
Yeah. I know. I just remember now. Yeah.
So that bit's fine. But also you need to do 35,000 less 6,000.
And then that will use up this band right here.
Correct, yeah.
So it will be plus 35.
Equals. And remove the first bracket. Okay, yeah. That's
Yeah.
fine. Now, I'm still thinking because on death, the nil rate band is used cumulatively. So the 296 will go against the 414. It's used. So I think ignore what it's saying there. No lifetime inheritance tax was payable. That's fine.
Yeah.
Because that information is there in terms of, you know, when there's a CLT and then you can deduct the lifetime tax paid.
Yeah.
That's what that information is there for.
Okay.
But don't get confused with the nil rate bands.
Okay.
The nil rate band is used cumulatively, so move that across against the 414. Yeah, so 260,000 is chargeable. So if you say, so can I just take control on the screen?
Yeah.
Let me just show you how I would sort of, so that top bit is fine. Somewhere here, I would put the whole 35,000 less 3,000 less 3,000 gives me 29,000. So I'll just keep that there. So then we know where that's come from.
Mm-hmm.
So we're saying 118,000 remains. So I'd say this is okay.
Yeah.
So then I'd simply do probably add a row here. So I'd say 118 times 40%. And then I'll say 260 4%. Okay, so who's responsible for paying these taxes?
The daughter for the first one.
Yeah, for the pet is the daughter, and it's the trustees for the trust one.
Oh yeah. Okay.
And then for the death tax, we can ignore all this.
Okay.
There's no nil rate band remaining, right?
Yeah, correct.
So it'll be utilized. So I'm just going to delete this part here. Is it 348? Okay, so you've done daughter there, that's fine. Over here, proprietor.
I forgot the name.
Personal representative.
That's it. Oh yeah. I knew it was something starting with P, and
Yeah.
I was rushing.
Yeah, just if that happens in the exam, just still put it down. You never know, you might be so good.
Usually, but usually in the exam, I saw it was like a tick box. So it said, select how much inheritance tax needs to be paid, and also who needs to pay it. So I had to tick 2 boxes.
Okay.
And so the choices were person representative, daughter, and then the numbers were 2 different numbers. So if that makes sense.
Yeah. So it's sort of the word is there for you then.
Yeah.
Yes, that's fine. But anyway, I think you remember after this personal representatives.
Yeah.
And then trustees pay on the CLT, and daughter pays
on the
on the cash gift. Yeah. Any question there? That's for 6 marks. So you'll get you'll probably get like 1 mark, 2, 3, 4, 5, and then stating will get you half mark each, so about 6.
Okay.
Okay.
Yeah. Yeah.
Any questions?
I just got confused with the nil rate band of the property.
Exactly. The on death, the nil rate band is used cumulatively, so it would have been fully used up.
Yeah.
And lifetime tax, that's there to see if we need to make a deduction or not.
Yeah.
Good stuff.
Okay.
Let's go back to my screen, please.
Yeah.
Okay, explain why it might have been beneficial for IHT purposes if James left a portion of his estate to grandchildren rather than children. Any thoughts, general thoughts?
Because you're skipping a generation. So, for example, if he gives it to his children, when they pass it down, then they need to pay an extra 40%. So
Exactly. So if you give it directly to the grandchildren, you'll skip a generation, therefore you're saving 40%.
40%. Yeah.
Good. 2 marks is very generous. That's all you can really say. Explain why it might be advantageous for IHT purposes for a person to make lifetime gifts, even when such gifts are made within 7 years of death. Why? Because you mentioned that if you survive for at least 3 years, taper relief will reduce the amount of inheritance tax payable.
Yeah.
Okay. And your answer should include a calculation of James' IHT saving from the gift of property rather than retaining the property until his death. Exactly. So the gift of property increased in value to 310,000. So on death, it would have been 310,000 at 40%. However, he made the transfer into the trust, so it's owned by the trust now. Trusts don't pay any inheritance tax in that sense. So that he saved basically 50,000 at 40%.
Okay. Yeah.
Did you follow that perfectly?
Yeah, I did. Yeah. So when you put into the trust, it was 260, but then for inheritance tax, even the value goes up, you take the value that you initially put it in at.
Exactly,
Right.
because it's out of your estate, technically.
Okay.
But if it was in your estate, it would have been the 310 that's been subject to 40% tax.
Okay.
Okay.
Yeah.
I think that's comprehensive for 10 marks. Do you have any questions?
No, that's fine.
Let's move on.